GNUS Brands Stock News Update. Okay guys, so in this video we're going to be talking about GNUS Brands. So I know it's been a while since I last uploaded, guys, and it looks like now we're seeing a lot of headwinds with the whole, of course, the whole Russia-Ukraine crisis. We've got the pandemic outbreak in Shanghai and China. We have rising bond yields, and of course we have basically lots of inflation, guys. So lots of inflation coming up, but a lot of headwinds coming up, and this is one of the reasons why I think GNUS stock has been absolutely crushed, guys. Okay, it's been absolutely crushed. It's now down below $1 as of recording this video. As you can see, it's currently trading at around 82 cents with a lot of support. So in this video, guys, I'm going to talk about why I think GNUS Brands is an excellent long-term buy, even though we might see a bit of short-term headwind pressure. We might see a bit of some low periods right now, but I think over the long run, and especially heading up into Q4 2022, especially heading up into 2023, I really think we're going to see a big reverse because there's been a lot of positive trends that have been going on with this company. They've made a lot of key acquisitions. Okay, the Shaq's Garage cartoon is going to come out in Q4 2022, and a lot of positive things I want to talk about in this video, guys. Before I get into the video, guys, please take the time to subscribe to my channel if you haven't already, and smash the thumbs up button because it really helps. So let's get right into the bulk of the video, guys. So the reason why I'm going to give you guys this update right now is GNUS Brands just recently released their 10K. So their 10K is the annual report. All publicly traded companies on the NASDAQ and New York Stock Exchange are required to file this type of annual report. So shareholders, investors, and everyone like that can see exactly how the company is doing. So what we're going to do in this video is we're going to go over the shareholder letter that was recently posted on the website, on the GNUSbrands.com website by CEO Andy Hayward, and then we're going to dig into the actual 10K. I'm going to point out a lot of key things to you guys that I picked up when I started reading it. Of course, it's a very long document. We're not going to go over it page by page, but I'm just going to point out some important things, and then I'm going to talk about some of the certain ways that I'm playing this currently, because I am down around 52% in my position. I'm at an average cost basis of around $1.73. So of course I'm not happy about where I am now, but I do know that this whole sell-off back in November with tech stocks was completely planned. Okay, the rich started dumping their stocks in November, and that left a lot of us retail investors, a lot of us holding the bag. So I'm going to tell you guys exactly what I'm going to plan to do. But first of all, let's go over this quick news, and I'll share you guys what I'm kind of doing personally. So if you guys, I'm going to post a link to these pages in the description if you want to check them out yourself. Of course, it's really important to do your own due diligence when you're, definitely investing your own money, guys. Don't ever invest money you can't afford to lose, and make sure that you're not just blindly following recommendations, that you're actually understanding the company, understanding how it makes money, and you believe in it, of course. And one of the easiest ways to do that is to simply just spend a little bit of time going over some of the quarterly reports, going over some of the 10K annual reports, and just staying up to date with the news. It doesn't have to be a full-time job or anything like that. You could just spend a couple minutes a day, or you can just reserve a block of time on the weekend to catch up on everything. So this was posted on April 6, 2022. It says GNUS Brands announces a 217% increase in revenue to $7.9 million versus $2.5 million in 2020. So this is a pretty long letter, so I'm just going to go over some of the key points here. So probably the thing that stood out the most to me was, of course, obviously the huge revenue growth, but also that the WOW acquisition is now worth around $64.2 million in 2021. And of course, we have some more information about Shaq's Garage. So let's just go over some of the key highlights in this letter. We have, of course, I mentioned earlier, the revenue is up over threefold, okay, in 2021. That's great. I mentioned WOW acquisition. Okay, the company's holding around $116 million in cash, and viewership for the cartoon channel has been growing steadily. It's been increasing. We're going to talk a little bit more about those numbers. And we're also going to mention a very exciting, it looks like cartoon channel and GNUS Brands, they're kind of copying the Netflix model. They're coming out with their own Web 3.0 metaverse product called Kitaverse that's going to charge consumers $3.99 per month. So now the GNUS Brands has kind of ditched the whole just 100% ad model. Now they're moving into paid subscriptions, which is absolutely huge, because it's kind of interesting, because even Elon Musk suggested that Twitter offer a $3 paid subscription. So we've got most of the big tech companies out here, Apple, Tesla, Amazon, Netflix, they all have some sort of paid membership. And not only is that something that Genius Brands is getting into, that's actually something I want to get into with Investor Trip. So we're going to be working on kind of offering you guys a paid subscription where you can guys get some premium content, some premium video content, and also on our website get some other premium research data that we've been working on. But I kind of digress. So I just want to kind of finish out this shareholder letter. So let's get to some of the key parts, guys. Okay. So as you can see here, those are just the key announcements. So now let's actually go over the shareholder letter. Okay, so this letter is actually posted on the blog, guys. So let's just quickly go over it. So as I mentioned earlier, great revenue highlights. 2 key acquisitions took place in 2021. Okay, Wow Unlimited Media, which I mentioned earlier, and Amivia, both of which are cash flow positive, accredited acquisitions, so that should really help. The cartoon channel, as I mentioned, has been growing all of its key metrics, downloads, viewership, advertisers, watch time, everything. We mentioned the Kidverse, and they've increased over 20,000 episodes of high quality content, and they're holding a good chunk of cash on a balance sheet. This company does not have a lot of debt. So let's just kind of quickly go over it. So one of the things about Wow that's so interesting to me is that this is actually kind of a mini, well, it's really actually not a mini, it's a pretty big YouTube network. Okay, they have over 2,500 content providers, and they do over 1 billion YouTube views a month, guys. So this is a really, really smart way for Genius Brands to kind of get into YouTube as well. They already have the cartoon channel, okay, on, Roku and all of these other streaming devices, and then they're launching the Kidverse. But getting into YouTube, guys, and YouTube, it's obviously, as a YouTuber myself, you guys know a lot of other YouTubers in kind of the personal finance and investing niche. A lot of guys out there making a ton of money, so we know there's a lot of money to be made in YouTube, so it's really great to see Genius Brands get involved with that. Okay, they made also another acquisition as well I want to talk about, and this one is called Amivia. So Amivia is the reason why they're launching the Kidverse. They're basically rebranding Amivia as the Kidverse with over 13,000 episodes of children's content, and they're going to be charging $3.99 per month. And the reason why they're doing this is simply because they want to kind of get that paid revenue coming in. They want to get more, I would say, a more consistent revenue base, because in the future, we don't know how well advertising is going to do in the future. Okay, a lot of people have ad blocking, ad blockers up, and a lot of people are immune to ads in general. So offering a paid subscription is a great way to diversify your revenue. So let's take a look at some of these numbers when it comes to the cartoon channel. As you can see here, total app installs up, unique users up, hours watched up, video plays up, everything's up, revenue up, unique advertisers, everything. So that's great to see kind of the cartoon channel progress. And then we have the launch of the Kidverse. Now this is really interesting, okay? They're also going to be offering NFTs on the Kidverse, and they also have their own crypto coin called, I believe the coin is called Kidbucks, which people will be able to trade and stuff like that. So really interesting to kind of see Genius Brands get into Web 3.0. That's really excellent. And as you can see here, guys, all-star management team and things like that. Everything's moving in the right direction. So last thing I want to talk about in the shareholder letter, I'll post a link to the description, guys, is Shaq's Garage. Shaq's Garage will be debuting in Q4 2022. Shaq has over 57 million social media followers. Should be really interesting. I expect a huge spike in the stock price in Q4 2022, which is one of the reasons why I'm pretty long on January 20th, 2023 calls. I'm going to show you guys that options chain in a minute. So as you can see here on Yahoo Finance, Shaq's cartoon is going to launch in Q4 2022. So I've been really taking a look at some of these long-term January 2022 calls. As you can see here, you can pick up some of these calls for pretty cheap, okay? The upside is there. We've seen it in the past when big celebrities get involved with companies and things like that. We can really see the stock price soar. So that's one of the good things. I really think that this is an interesting way to play if you're not holding the shares long. Of course, I'm holding long, but this is kind of an extra way I think we can kind of, have some lottery tickets that could possibly pay off. So now I want to quickly dig into the actual 10K. I want to mention some things that kind of stood out to me. Okay, so we've seen revenue go up to over 7 million, and if you include the Wow Unlimited acquisition, revenue is currently, if we were to include it in 2021 revenue, it would be over 70 million. So that's great. The stock only has a market cap of $250 million. That puts it at a price to sales ratio of around like 4. Okay, very good for a media company, I think, much cheaper than the current. But the problem is that we have some delisting fears. Okay, so if you guys aren't familiar with the NASDAQ, you must have your stock price over $1 to basically be listed on the NASDAQ. So on March, I don't know if you guys could see this, but on March 4th, 2022, Genius Brands received a delisting, okay, notice from the NASDAQ. So basically, if your stock price is below $1 for 30 days in a row, they will give you a warning. So the good news is that Genius has until August 31st to comply. So the only thing you have to do to comply is have your stock price over $1 for 10 consecutive business days, as you can see here. So this is a problem, okay? The stock is already at 82 cents. Now the good news is that there has been a lot of support at these levels, but inflation could get worse. There could be, some more ramifications, some more of a domino effect from the whole pandemic outbreak in Shanghai. And of course, we have bond yields are going up. So perhaps there could be some more downward pressure that could really make this delisting fear a reality. So there is some risk here, guys. Okay, what happens with these NASDAQ stocks? They get delisted. They simply move them to the OTC. That's really bad because you're not even able to trade OTC stocks on platforms like Robinhood and Webull. So that would really, really, really hurt this stock. It would kind of just make it fall kind of off the radar for a lot of people. Kind of similar to what happened with that coffee company, Luckin Coffee, how it went through the moon and then it fell off the I believe it fell off the New York Stock Exchange or the NASDAQ, and then it just went OTC. So that's not what we want to see. We don't want to see this stock delisted. Well, hopefully we can regain at least $1, and hopefully that people will kind of realize how undervalued the company is now that they've made a lot of strategic changes. Okay, and another thing I want to talk about is another risk factor that I found in the 10K. It's the massive losses that this company has been dealing with. Okay, so here we are. We're taking a look at the right now we're taking a look at simply the income statement. Okay, guys. So we're basically looking at, how much money the company is bringing in. So as you can see here, Genius Brands lost $126 million in 2021. That's negative 42 cents per share. So obviously this is a huge improvement, okay, from 2020. So the losses were 400 million, so they've been reduced. But the problem is that you take a look at the share count, it's basically doubled. So the company's been slowly diluting the stock and then raising capital to do acquisition, things like that. So that's obviously good, they're going to make more money and things like that. But the problem is that the company still continues to lose money. And in an environment like this with high bond yields, high inflation, war, all of these problems, I think people are going to gravitate towards safer dividend stocks where they can generate income, stuff like oil and gas, REITs, boring stuff, because we don't really know what's going to happen. And that's one of the reasons why a lot of these tech stocks have been absolutely crushed. As you can see here, Genius Brands is down basically 50% over the last 52 weeks. So that's a problem. This company is dealing with some cash burn. But the good news is that we're hoping that with the 2 new acquisitions and hopefully with the launch of Shaq's Cartoon, things will kind of turn around. So these are kind of some of the things I wanted to point out in the 10K, guys. I'm going to link to the 10K as well in the description. You guys can check it out. Very interesting. Really helps to sit down and read some annual reports. You guys get some more clarity. So now I'm going to tell you guys exactly what I'm personally doing. Like I said, I'm still a bag holder. My average cost is $1.73. I'm not going to do anything now. Probably going to add more under $1. I really think that Shaq's Cartoon in Q4 2022 is really the catalyst that we need. The only problem is that this is around 7 to 8 months from now. So it could be just more bag holding, could be more downward pressure, and that NASDAQ delisting risk could be a real problem. But other than that, I gotta like obviously what the company has been doing. I like how they've been increasing the revenue. I like the new product launches. If we take a look at this, okay, market cap of 250 million. If you include the WOW Limited Acquisitions company just did, or over 70 million. So the revenue is there. The price to sales ratio is far more attractive, and there's not a lot of debt. Okay, just $2 million in debt, over $100 million in cash reserves. So like I said, I think this is just a waiting game. I didn't anticipate it would take this long to wait for Shaq's Cartoon. For me, that's my big catalyst. After Shaq's Cartoon launches in Q4 2022, I'll probably try to cash in some of those lottery tickets on the options. And on the shares, as long as I'm over $1.73, I'll probably sell a little bit and then hold the rest. But right now, it's going to definitely be some downward pressure. So I just wanted to give you guys an update of what's been going on. If you guys enjoyed this video, and we're about to wrap things up, please smash the subscribe button and hit the like button as well. So that's until next time, guys. Take care.